as we gather here for MPGC this year in Dubai, the oil and gas industry has been through some pretty dramatic changes over the last 6 months. We saw really bearish markets for oil in Q4 and then a resurgence in prices in Q1. And the question for oil in particular as we go through the rest of this year is, can the oil markets sustain these relatively higher prices, or will we see another slide backwards again in the second half of the year? For a couple of reasons, Platts Analytics, our forecasting division, is actually forecasting that oil prices will be at these levels or even higher by the end of the year. First and foremost, of course, OPEC's diligence on production cuts, along with its non-OPEC production cut partners, has been very bullish for the market, and our analytics team expects that to continue for the rest of the year. Secondly, of course, we have IMO 2020 coming in, which will drive more demand for diesel and high-value oil products like those at the end of this year and the starting of next. So there's two important reasons we think the markets will be fairly strong through the rest of this year. Gas is a different story. LNG prices have been at historically low levels for the past few weeks. And there's a serious period of oversupply in the LNG markets that'll carry on for another year or two. Which means the oil and gas dynamics are quite different between oil, quite bullish, and gas, quite bearish between now, the end of the year, and heading into 2020. There are, as always, challenges that the industry will face, particularly around investment and development in the coming months. While it is a broadly bullish scenario for investors at the moment, there's quite a bit of unpredictability out there, particularly in the form of short-term fluctuations in supply and demand and short-term fluctuations in prices. Out there on the horizon, we've seen the ability for U.S. crude oil in particular to surge in production when the value of crude oil moves above a certain level, not much higher than where we are today, as a matter of fact. And investors may be nervous about investing in 2 to 3 to 10-year projects when there's short-term volatility in the market. Nevertheless, the fact that these investments are long-term in nature means that many investors are willing to look beyond that and think about supply-demand in the next decade or so, which really takes me to the point of view for the rest of this year. We expect at Platts that the oil markets in particular will be volatile. We've talked about the fact that flat prices for crude oil from the point of view of Platts Analytics should move higher towards the end of the year. We expect OPEC and non-OPEC producers will continue to be diligent around production and keep some of those caps in place. That's a key question coming up in June and July in Vienna. But also we expect that in the refined products markets there'll be a lot of volatility between the value of diesel, gasoline, and fuel oil that ultimately will have an impact on the future of crude oil as well. That volatility in particular is being driven by the move of the shipping industry from using high sulfur fuel oil to lower sulfur fuel alternatives from January of 2020. So one to watch carefully there.